won't stop till I hear him say,
Alrighty, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, guys and gals, go ahead. Please consider subscribing to the YouTube channel. In today's video breakdown, I'm going to do a deep technical analysis dive on XRP. I'm going to first show and break down for you some significant price levels to be paying attention to in the up and coming months that we have left of this year. And then I'm going to show you guys how over the past couple of days worth of price action, based off of some of the things that I've been saying on my Twitter and my YouTube, you could have taken intraday buy positions on XRP. Now, personally, before we jump into this video, I'm not an affiliate of this company or this broker or anything like that, but I've told you guys multiple times that I have two bags of XRP. I have a long-term bag of XRP and I have a bag of XRP that I like to day trade, meaning I trade it leveraged. So this is the company that I utilize, CYPRX. I don't have an affiliate link for anything like that. I'm not going to sit here and try and collect money off of your guys' affiliations. But they offer different types of leverage, 1 to 100, 1 to 200. I use 1 to 500 leverage. And I grew a portfolio roughly starting at about $3,000 or maybe even $5,000. I don't remember, about 2 years ago when I started trading crypto leverage. Okay. But so if you guys really want to learn how to trade crypto leverage via the technical analysis strategy that we use instead of just buying and holding long term, you guys can even go and open up a demo account and start playing around in the live market, which is what I highly suggest you as individuals take upon yourself to do if you're starting to, get into trading leverage. Open up a demo account. You guys can go scroll on their website. It says right here, open a demo account, and you guys can start to day trade the strategy that we teach here at CYPRX on the leveraged account, and hopefully apply some of the things that we teach here and they work out in your favor. All right. So in today's video breakdown, we're going to go over all of that. I'm going to give you guys my long-term perspective for those of you individuals who are long-term holders and hodlers in this market for XRP. And then I'm also going to give you my intraday perspective based off of the strategy that we teach here at CYPRX. Okay. But before we get started into that, I haven't given you guys an update on XDC in a while also. So I will go ahead and just update you all on what it is that I'm seeing with XDC. I'm starting to accumulate heavily. If you guys can see where price action is at, I'm going to also share with you guys a screenshot that I had sent to the CYPRX students a couple of days back, where I had been mentioning XDC and a potential pullback and what I was looking to take place or what I was looking for to happen on XDC before I start accumulating more. And as you guys can see via the screenshot that I share with the CYPRX students, here's our Bitcoin XRP chat. I sent them an XDC analysis on August 15th. So if we can go back on the charts and just look at where August 15th was, that was right here when price action was at this top. Okay. And I've even mentioned to you guys on YouTube and here in the CYPRX community, if you're a part of that, that we do not buy tops at CYPRX. Okay. We're very strategic with where we buy price action. We like to buy from a discount. So as you guys can see with the screenshot that I sent to the CYPRX students and the analysis that I gave them, I said to them, if this scenario played out, it would be a beautiful entry. Price needs to hold the bullish momentum above 0.500 cents. If we break bearish, I have buy limits set underneath June loans. However, if a discount pullback holds, I will also be seeking to allocate some funds into XDC. I'm watching it closely. And as you guys can see where we are at currently in price action, literally psychological level call outs that I give to the students way in advance to the T, hopefully saving them in this market. Okay. As you guys can see, as soon as I sent that screenshot, price dropped and melted over 30%. Okay. So if, any of the CYPRX students paid attention to the analysis that I sent them ahead of time in the group, this would have been a very nice save on their portfolio. And now it's time to maybe potentially start accumulating because we are at discounted levels where banking institutions clearly bought from before. So personally, now that price is below the 275 psychological level, not the Fibonacci retracement, the 0.275 cents, okay, psychological levels, that's where the banking institutions trade off of. I'm going to start accumulating heavy on XDC. I sent them the analysis that I think from here, XDC could potentially go back to the upside. If it is bullish, it is most likely going to create another leg higher. That's what it would logically need to do. So I'm going to start accumulating XDC at these low prices. For anybody that is is interested in XDC, there's my technical analysis, and there's also proof in the pudding that I am very transparent with my students, and I send my analysis ahead of time, hopefully in an attempt to save their portfolio. Nothing that I give to the students is financial advice, but now you guys can see that if they had listened, it would have saved them over 30%. Okay. So that's my XDC analysis. I'm not going to give you guys my overall bullish price targets, price predictions on XDC. Personally, I'm accumulating enough XDC and XLM as well as Casper, so that way I can pull profit at $1 and make a very, very significant amount of money. I have enough funds to allocate into the market where I can buy enough of these low price coins like XDC, XLM, and Casper, which are all below 15 cents. To grow my bag to the point where, if prices just return back to $1 on any of these assets, it's going to be a very significant return on my initial investment. Let's just say that. Okay. I'm not going to be a bullish moon boy for either of those assets, although I do think in the future it is very wise to have a long-term bag, which is what I'm going to do. So that's going to be like a 5 to 10 to maybe even 20-year hold. But short term, right? I've already mentioned to you guys that with these utility driven assets, I think that if you're accumulating enough, okay, during the next bull run, when prices do potentially see new all-time highs or maybe even go into small price discovery, like especially XLM, I think that $1.50 to $2 is very conservative and very realistic. Okay. Same thing with XTC. I think $1 is realistic. Same thing with Casper. I think $1 to $1.50 is realistic, right? Those aren't really bullish Moonboy price predictions. That's just maybe we see another alt season. Okay. Let's get into XRP, guys and gals. Smash that thumbs up button if you guys like the reality that we give here on CYPRX. I'm telling you guys right now, to be a smart, wise, and mature investor, it does not take a lot of action. It's just you as an individual to take it upon yourself to not get manipulated into thinking you're going to become a millionaire overnight. I even posted to you guys something on my Twitter the other day that there aren't even more than 200,000 people on this earth that are going to become rich or a millionaire when XRP hits $35. Okay. There's less than, I believe it was like 186,000 people that hold more. If you do the math, right, for you to become a millionaire, if XRP specifically were to go to $35, okay, you would need roughly about 28,000 tokens at time of writing. So right now, price is roughly at about 32 to 33 cents. Okay. That means that if you divide, 1 million by that number, that would give you roughly about 28,000. You need 28,000 coins to be a millionaire if XRP even goes to $35, excuse me. Right. So think about that. Do you have that much, or are you one of those people that has 1,000 to 2,000 and maybe 5 to 10,000 coins that's sitting there waiting for $1,000 price tag on XRP? Don't be that person. Personally, in my opinion, you could become much better off a lot sooner and retire a lot faster by accumulating more of these utility assets, not financial advice. That's what I'm personally doing. Okay. So let's get into the price predictions in the near term for the rest of this year for XRP. Personally, there are some very significant price levels that we need to break above before I personally scream that the bottom is in. And I've told you guys multiple times, those are May and April highs, mainly because that's where the majority of the bullish pressure started after we swept liquidity back in March. Okay. So I've been talking to you guys on the YouTube channel back in April and March, and we called this bearish move out to the T. I told you guys that if we don't break above that 90-cent psychological level and we break below 77 cents, that we were going to dump. And this was back during my birthday on April 15th to April 16th when XRP had smashed below 77 cents. We called that out on the YouTube. Okay. So in order for this bearish pressure, okay, that we have been creating on XRP to completely get annihilated out of the market, and for buyers to become the strong hands in the market, we need to break these significant psychological levels, in my personal opinion. Again, remember, the banking institutions, okay, guys and gals, they trade off the higher time frame. So I get right now that prices are discounted, and I've told you guys multiple times that as long as price is above 32 cents, I'm only going to intraday trade XRP. That means that I'm only taking trades on my leveraged account on XRP utilizing a stop loss, because personally, I don't think that the bottom is in. Now, if price is below 32 cents, I switch over to my long-term accumulation mode and I buy for long-term gains. You guys see that that's my strategy. Okay. Take it or leave it for what it is. And the reason why I think these two significant psychological levels are the ones that need to be broken is because let's just say, for example, we do see some type of bullish relief. We have some bullish fundamentals. We have NFTs dropping on the XRPL in September. We have the Flare network coming out this year, if I'm not mistaken. I don't really follow that too indefinitely, but I've heard rumors and I've seen other people on YouTube and Twitter cover that stuff. Just because personally, I'm not going to add that to my portfolio. It just doesn't suit me. I just don't feel like doing that extra research on it. Maybe that's just me being lazy. Call it what it is. But I have enough, utility in my bag already. Okay, I'm not trying to spread my eggs too thin. And then we also have the Ethereum merge coming out in September. We also have the Fed rate hike announcement coming out in September. So maybe hopefully they drop interest rates. That would be cool. That would boost the market. What else do we have? We have ISO 222 coming out in November. I mean, we have a lot of bullish fundamentals coming out for the rest of the year. So could we see some bullish relief from all of this bearish price action that took place? Absolutely, guys and gals. 100% that's possible. But I'm not screaming the bottom is in until we see a sustainable break, a bullish hold in the form of some type of support or demand, if you want to call it that, above these psychological levels, which is 66 and 85 cents. Okay. So with that being said, the reason why is because at any given point in time, when these May highs or April highs are violated in the form of over leveraged sellers being tapped out of the market, we need to be mindful of what the market's going to do. Are the banking institutions going to drive price higher from that grab of liquidity when they come up into these May and April highs? Or are they going to look at this in the form of premium, okay, taking our Fibonacci from highs or highs here down into lows and seeing that the banking institutions sell from a premium to take price lower, okay? So once price comes up into these areas, okay, again, remember the banking institutions like to sell from 79 to 70% premium, okay? We need to be very fragile. So any scalp positions or intraday buy positions that I take up into these psychological levels, I'm going to be very mindful of. This is also why I'm not purchasing long-term XRP bags anywhere above 32 cents. For me personally, I've mentioned to you guys, I've been an XRP holder since 2017, 2016 timeframe. So I bought a lot of my XRP at 17, 19 cents. Okay. So for me personally, it's not discounted enough for me if it's above 32 cents. I always have an alarm set at 32 cents. If we break it, I start accumulating. Okay. Now I don't just go out and randomly buy price. I monitor New York session because I'm a New York session trader and I look for specific entry criteria to add to my long-term bag. So that's going to lead me down into the intraday trading strategy that we trade here at CYPRX to break down for you guys. Okay. What I look for when I'm adding to my long-term bag or when I'm trading leverage is a specific strategy that we've designed in the market that gives us a critical edge in order for a trade to potentially go in our favor. Again, that is what our goal is here at CYPRX. That is what our goal is as traders. We do not know the outcome of any given trade or any given market sentiment. Okay. All we can do is piece together a certain set of confluences. Confluences are like a list of things that you like to see in the market before you get activated to place a trade. It's like right, you're sitting at a red light, you're sitting at a yellow light, and you're waiting for that green light. The green light to pull the trigger on whether you buy or sell in the form of leveraged or a long-term hold are going to be a certain set of confluences. And I've talked to you guys about this multiple times. So let's just quickly go over this in the form of structure right here before we get into price action. I'm just going to show you guys literally putting my money where my mouth is. Exactly what we teach you guys on YouTube is every single time the market buys for XRP during New York session, this is what happens. So I'm telling you right now, again, this isn't financial advice. This is how we trade the market. If you pay attention to this, let me know, DM me, okay, if you're interested in learning this strategy more in depth, because we have over 60 hours of course content that breaks this down for you in extreme detail. If you are finding that the content that we provide on YouTube is easily digestible and you want to take it up a notch, okay, maybe you're interested in trading XRP, Bitcoin, Ethereum on a leveraged account. You can open up a demo account and start practicing this while you're going through our course material, okay? Start improving yourself as a trader and not just being a long-term hodler that's sitting there waiting to become a millionaire. I mean, you guys can pull money from this market. It is possible. Again, it takes practice and you need to practice on a demo account before you come into the live market. It's not a reality for you to just become a millionaire in a month. That's not reality. But I have students like Danny who's passed a prop firm challenge in 6 months. I have people like Christian who's passed a prop firm challenge in 7 months. I have people like Ezra who passed a prop firm challenge after the first 4 months of learning the strategy. Like it's oh, guys and gals, you got to get on the wave. You got to get on the wave, not financial advice. Okay. So this is what we look for: higher time frame, 15-minute to an hourly analysis, always trading in tandem with the higher time frame. What we want to look for is a previous bullish move that leads to a break in structure. So as you guys can see, we're going to pretend that this is 15-minute structure. Okay. And it created a higher low after a potential sweep of liquidity underneath of this low. Okay, that led to a new market structure high. As you guys can see, this new market structure is higher than the previous. We're not going to buy from a top. Okay, and what we want to notice about where the structure was bullish at was what specific sessions these structures or these areas right here took buy positions from. Okay, so let's just say specifically this was London and then this was New York. So we're going to highlight those significant areas of interest because we know that on the 15-minute or the hourly chart, when the market pulls back into this area, this is going to be a significant area where if the bank and institutions are bullish, they're most likely going to seek to take buy positions from in the form of discount on the higher time frame from where they bought from previous. So that is one of our sound CYPRX confluences, is we like to take our Fibonacci from the market structure low that led to the break in structure high, okay? And we like to wait for discounted pullbacks. Well, when the market pulls back into roughly 66 to 100% discount, we like to then jump down to the lower time frame to monitor price action. So we're going to go from the blue box to the orange box, which is going to dictate or determine lower fractal price action. So this is what we want to see on the higher time frame. Again, trading in tandem with higher time frame discount or premium. It's as above, so below. It's the same thing. If you're selling on the higher time frame, you're waiting for the market to sell off, break a previous market structure, and pull back into premium so that way you can continue to trade with the market trend. Okay, it's the same thing. So now we're going to jump down to the lower time frame, the orange box, the 5-minute to the 1-minute time frame, what it is that we want to be seeing in the market before we pull the trigger. Again, this gives you a higher probability for a trade to go in your favor. It is not guaranteed, but if the market is going to flip bullish, it has to do this, guys and gals. You understand that the market, in order to move higher, okay, in order for the market to come up here, what must it do? It must grab liquidity from a low to build the volume and the momentum that it needs to take prices higher. Once it does that, this is a signal by the banking institutions that the market has no interest in lower price action. Once they start to create bullish order flow, which is what? Higher low, higher high formations. That is bullish order flow, guys and gals. Okay. Then you can assume that they're going to add to that order multiple times because they can't just put in one institutionalized order to take price to this overall target. They have to add multiple times. That's where you come in as a trader to try and accumulate orders at those additional orders where the banking institutions are going to add to their original order. Okay. So with that being said, what we look to see on the 5 to 1-minute time frame, once the higher time frame comes into our significant area of interest that we've already pre-established on the higher time frame, we're looking for a liquidity trap in the form of a double top formation or some type of trend line liquidity to the upside to give us a reason as to why banking institutions are going to target this area. So you guys can see here, I wrote down liquidity trap for you. That's what we're looking for to the upside. To the downside, we're looking for a pre-engineered low during our manipulation region during New York session to get set or established in the market, which I'm going to show you an example of. We're then looking for that market structure to get violated. We're looking for price to respect the psychological level. We're looking for an equal match of bullish momentum that leads to one of two things: either a break in market structure, breaking previous fractal structure, or an equal match of the momentum that sent price lower, and for the market to start to create higher lows, higher highs, higher lows, or bullish order flow. Guys and gals, it is not hard for you as a trader to sit and wait patiently for these confluences to play out. Watch and check this out, how every single thing that I just explained to you guys on the charts right here happens time and time again. So what we're going to do is we're going to go back and we're going to look at the past 4 days worth of price action on New York session. We're going to look at this session here. Let me change this drawing tool to red so that you guys can see it a little bit better on the charts for YouTube. Okay. And so what we're going to do is we're going to track New York session buys for the last 1, 2, 3, 4 days. And I'm going to show you guys how every single time they bought price action, they did the same thing. They bought from a low. Okay, they manipulated price back down into a low, and then they bought price action. So here we can see the very start. Okay, we can see right off the bat that New York session, okay, they got past price action at a high, and they bought from this significant area. Now, with that being said, that led to a market break in structure and internal liquidity. As you guys can see, this is the triple touch of a trend line right here. We see one touch here, one touch here, and one touch here. This is internal liquidity. The market makers, before they sent price higher, push price into discount one more time. So here's the violation of a low. Here's the liquidity trap in the form of a high. Remember, I said you need to see a double top formation. Here's a double top formation. So instead of buying at a top, okay, during the beginning of New York session here, don't do that. Wait for the market to tell you what it wants to do. Well, here you can clearly see the market was printing bullish order flow by creating higher lows that lead to higher highs. That's bullish order flow. Then it created internal liquidity, and it created a liquidity trap to the upside. Then the market makers pulled back into discount from where they bought from previously. They cleared out all the liquidity beneath the trend line, and then they went to target the trend line liquidity or the double top formation or retail resistance traders above these highs. It is literally that simple. All you have to do is be able to pay attention and identify that. So the same thing that I taught you guys over to the right-hand side when we were drawing on the charts a second ago, look what the New York session banks did. Before they bought price, they manipulated price in the form of internal liquidity to come and target external liquidity. Okay, same thing here. Look what this New York session did. What did they do? They manipulated price all the way back down into lows from where London session bought from, guys and gals. So let me clear up all the drawings. This is where we're going to get into extreme detail on how you could have caught this trade, right? By simply doing what? Tracking price action the way that we teach you guys on the YouTube channel, taking significant areas where banking institutions, here you see Asia and London, they bought from these lows. So highlight from the candlestick bodies down to the wick, that's the lowest point in price action during the session, and extend that over to the right-hand side. This is on the 10-minute chart. We'll go ahead and change that back to blue. Personally, I like to use blue. All right, so we can see here, this is where banking institutions during previous days, i.e. Asia and London, bought from. With that being said, this is going to be a sensitive area where if the banking institutions pushed back down into this level and they don't break it in the form of a psychological level, i.e. here's that 32-cent threshold that I've been talking to you guys about on the Twitter for quite some time, that we must see broken in order for lower price action to come into fruition. We have yet to break that as of time of making this video, okay? So there was a little subtle hint that I give you guys on YouTube. You could have also utilized to catch this move. But check this out, guys and gals. Look, I'm not making this up. Without me going through this, what can you see already during this New York session? Here's the New York session. Please tell me I'm not making this up. Here's liquidity above highs in the form of a triple touch of a trend line, one touch there, maybe another touch here. There's your trend line, or however you want to draw it out, okay? We see people taking sells from highs. Here's the pre-engineered low in the market. Here's the violation of that low. You guys see where I'm going with this, okay? Once the market reverses and matches momentum, what does it start to do? Higher lows, higher high formation. Literally exactly what I just taught you guys over to the right-hand side. This is what the market does. This is what the market has to do before it goes higher. It has to set liquidity traps in the form of over-leveraged sellers and people who have buy stops above highs, okay? People that are selling retail methodologies in the form of trend lines. They're setting up traps. Then they're setting up traps to the downside to come and push price down into discount to grab liquidity, push price down into where they bought from over to the left-hand side a previous day in the form of discount, and then they're taking buys. It is not hard to track this price action, guys and gals. Same thing here. Look what New York session did. Where did they take buys from during this New York session? At a discount from where they bought from the previous day. You guys see how that happens. But what were they attacking? Okay, what were they attacking and what were they setting up? The same thing. It's the same thing every day. The banking institutions play a game with everybody. They set up retail liquidity traps. They were allowing retail traders to take leverage trades from these highs or maybe from this order block here, right? Same thing. You see how the touch of the order block creates sell pressure, right? The banking institutions know that people are selling with leverage above these highs and that people will have buy stops and then will be willing to buy when price comes and violates these highs. Then they're manipulating price in the form of lows. Here's a low here, low here. There's a double bottom formation, okay? Then they have another pre-engineered low. They liquidate that low, push price down into discount from where they bought from previous, and then they take their buys. All you would have had to do to trade this New York session where they took buys from was say, okay, look, check it out. What did I just teach you guys? Let me clear up all of the drawings and we'll start fresh. Okay, we'll start fresh. So now we're not trading this New York session here. We're trading this New York session. Same principles, same methodologies that I just taught you guys, highlighting from where previous New York session, because we saw that previous New York session was bullish off of the 32-cent psychological level from the candlestick bodies down to the wick and extending that over. We have now an area of discount that we're going to look to buy from. Okay. We also have a market structure break where the previous New York market structure has been broken. Here are lower highs right here. Here's a liquidity grab, and the market structure after the liquidity grab resulted in a double structure break. There's a structure break right there. There's a structure break. So that gives you the green light to take your fib from the low to the high on the next trading day, extend that over. We can see New York session sold, and then they push price literally down into 79% discount. Guys and gals, you cannot make this up, and they took buy positions. Boom. On a leveraged Osprey FX account, again, taking a 1 to maybe 3 risk to reward ratio, okay? There was a 1 to 2, okay? On an leveraged account, there's 2% right there. Boom, intraday scalps based off of what it is that I teach you guys. You take your profit, you move your stops to break even, you let the rest of the trade run. Maybe you take 80% off the table. Guys and gals, look at this. You would have got tapped out at break even, but you would have been able to secure profit intraday scalping positions based off of what it is that we teach you guys here at CYPRX. Look at this, another day's worth of price action. And what were the banking institutions doing? Literally just extend this over from that 32-cent threshold that we had identified based off of where the banking institutions bought from during this New York session. And they do the same freaking thing. You cannot make this up, guys and gals. They build liquidity above highs prior to the session. During the manipulation window, specifically times that we give to the CYPRX students on when the banking institutions are doing this. Then we also give times in the market, specifically when the banking institutions are taking positions based off of the fact that these bankers are humans just like you and I. Okay. And look what they do, guys and gals. They manipulate price down into lows to give themselves the best bang for their buck in the form of discount from where they bought from the previous day and where they bought from the day prior to that. Okay, you cannot make this up. And here was another beautiful RR ratio just based off of those certain principles. Seeing and identifying liquidity above highs, beneath lows, waiting for the market to come down into discount from where they bought from on the higher time frame the day before, and being patient enough to understand bullish order flow once the market shifts momentum. Here's that same pattern. If I go ahead and I remove all the drawings, you guys can see here's the same pattern that I drew for you all. It is a liquidity trap to the upside, a pre-engineered low, a violation of that low, equal shift in momentum. So here's the bearish pressure that was equally matched out by bullish momentum. And now the market starts to create bullish order flow. Higher low, higher high, higher low, higher high. Happens every single time the market buys off, guys and gals. I hope that you guys enjoyed that video breakdown. Make sure that when I have technical analysis breakdowns like this, you all are taking notes. Let's go back over to the higher time frame, the daily chart on XRP, to kind of talk about the downside risk. Personally, what I think is going to happen on XRP, and again, this is just to be mindful of. I have targets set at 25 to 22 to even maybe 17 cents on XRP in case we do break that 32-cent threshold. In my personal opinion, if we break 32 cents, we are most likely going to come down to the June lows on XRP at a minimum. Now, if the June lows break, most likely people are going to get scared. People are going to start selling. Seller momentum is going to pick up if we break those June lows because there's a lot of liquidity and over leveraged traders beneath these levels. And we are going to see that push down into 25 to 22 cents. Okay. I will be monitoring price action if that comes into fruition. I have buy limits set just in case. Don't be one of those people that sits there and says the bottom is in and nothing bad can happen. Be prepared for the worst case scenario. But at the same time, have a plan like I do set in place for if the market continues higher. I've told you guys that I'm going to, seek to take leverage trades on my day trading portfolio above 32 cents and accumulating long-term bags of XRP beneath 32 cents. That's my approach to the market based off of where I've bought from in the past. Now, personally, I have enough XRP right now to where I'm like, realistically speaking, if the market does flip bullish, I will be very happy with where my bag is at right now. That is a question you need to ask yourself as to if you are going to buy where price is at right now at 33 cents. Is your bag big enough? Are you comfortable enough? Like I had mentioned to you guys, there's less than 200,000 people that are going to become millionaires when XRP hits $35 because less than 200 people, or sorry, excuse me, less than 200,000 people have more than 28,000 XRP tokens. Okay, so just take that into consideration as to where you stand on your XRP bags. Blessings to you guys. Nothing that I constitute here is financial advice. Simply all we do here at CYPRX is teach you all a strategy that has played out for us and has made us profitable here at CYPRX. We do appreciate the love and the support. Make sure that you guys subscribe to the YouTube channel if you guys enjoy video breakdowns and price predictions like this that are realistic and logical. Okay, for us to see that the bottom is in on XRP, guys and gals, it only makes sense for us to hold bullish momentum above May and April highs, because these are the last lower highs that led to the market sell-off pressure after the sweep of liquidity. Okay, you guys can see here again, I mentioned to you, we swept liquidity above highs. We created a liquidity trap in the market in the form of a double top formation that was failed to be broken. So retail resistance traders won that battle and they sold the market off. Then we started to create structure. Well, logically speaking, those structure highs would need to be violated and we would need to continue bullish order flow in the form of higher highs and higher lows above these structure breakage points. Okay. So let's just be mindful of that, guys and gals. If this price action does not come into fruition, then I'm still being cognizant and aware that banking institutions could take premium sales from these levels. Okay. If we do see a bullish relief pump throughout the rest of this year because of the bullish fundamentals that are coming out, just be mindful. Only invest into this market what you're prepared to lose. I said that to you guys in the previous video. Blessings to you all. I'll see you all in the next video breakdown.
Won't stop till I hear him say